Hello traders, today is the 31st of July 2013 and the time in London is 27 minutes past 12, in New York 27 minutes past 7. Happy trading to you all. The title of this video is How Do the Pros Trade the Zigzag Pattern? Let's get started. The zigzag pattern is the formation of a wave pattern. It's a corrective wave, and the formation is 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. Okay, so the zigzag pattern is form of ABC. So from here to here, I hope you can see on my chart. Can you see? All right. If you can see, that's great. Okay, so from here to here, that's a corrective wave. Okay, the blue line, okay, pay attention. And the blue line can be divided into 5 waves. So this is the A corrective wave with internal wave, 5 internal wave or 5 sub-wave. Alright, I don't want the video to be too long because I want to keep this video under 20 minutes. So I will recommend to traders to go to www.24elliottwave.com and to click on the wave theory. Here, this page here, this is the first page here, wave theory. Next to the home page, wave theory. We have here 4 videos about zigzag trading. How do the pro trade zigzag? So I will recommend to traders to go to www.24elliottwave.com and to check this page, wave theory. You must bookmark this page. Let's go back to our discussion. All right, so the A corrective wave can be divided into 5 sub-wave. Now pay attention, stay focused. All right, the second line here, all right, another blue line here, which I'll put like this. This is the B corrective wave. Very often the B corrective wave is a contra trend to the A corrective wave because the A corrective wave is going down. All right, and the B corrective wave must go up. It's a contra trend to the A corrective wave, and the B corrective wave can be divided into 3 sub-wave. 1, 2, 3. 1, 2, 3. All right, very important. Followed by the C corrective wave. All right, this is the C corrective wave. The C corrective wave also can be divided into 5 internal wave or 5 sub-wave. 1, 2, 3, 4, 5. Many traders, before you stop watching this video, many traders know about this. Now, how many traders understand how to use it? This is what we are talking about. Our mission is to simplify the wave theory without diluting it, focusing on things that work only. All right, so this is it. All right, so 1, 2, 3, 4, 5. That's the A corrective wave followed by the B corrective wave. As you can see, the shape of this, it looks like a zigzag, isn't it? Yeah. Follow the movement of my cursor. Went down, went up, and went down again. Attention, please, traders. The B corrective wave very often will fail to go above the 50% retracement of the A corrective wave. Sometimes it may go above it up to, all right, 61.8, 78% zone, but in most cases it will fail to go above the 50% level. It is better for it to go above the 50% and to go back below it, then we'll confirm the weakness. So this is a typical zigzag, all right, after an impulsive move, a bullish impulsive move. Here it is. So we want to see first 5, okay, wave, which means impulsive move. Because the zigzag is a corrective wave, it must correct an impulsive wave. If you do not see the impulsive wave, but you see a zigzag pattern, it's a fake zigzag pattern. Because a zigzag pattern is a corrective wave, it must correct, all right, another wave. Let's move on. That's why I say to traders to go to wave theory. Now I'm spending my time again to explain to you what is a zigzag pattern, what is happening. And I don't want to do that in this video. All right. How do the pros, okay, trade a zigzag pattern. This pro understand the formation is a 5-3-5. Few months ago, ladies and gentlemen, feel free to disagree with me, as a lot of traders have done this year. I was telling traders that the USD yen currency pair was in a first wave, an extended first wave. From here, I don't want to talk too long, to this point. From here to here, that's the first wave. All right. Now we are seeing a kind of a zigzag formation taking place here, correction. So we see an impulsive wave. We are expecting a zigzag formation. How do I know? One thing the professional are paying attention to, do not switch off traders. A corrective waves, all right? When we're talking about correction, we are talking about three, all right? Three wave, 1, 2, 3. You see, zigzag is 1, 2, 3. 1, 2, 3. But this portion has been divided into 5 so wave, this one into 3, and this one into 5. But generally speaking, note it down, when we are talking about correction, we are talking about 5, we are talking about 3. When we see, this is the practical part of this video, when we see a correction being divided into 5, so here we see, this is an impulsive wave. When we see a correction that has, okay, 5 internal wave, the first thing that is coming to our mind is what? The zigzag pattern. If you understand what I've just said, you are ahead of even many experienced traders. Let me say this to you again. When we are talking about correction, we are talking about 3 waves. Do not forget that. When you see a pullback after an up move, or you see a rally after a downtrend, and that rally or pullback, which is a correction, is formed of 5 internal waves, it must click into your mind that this is likely to be a zigzag pattern, because normally a correction is 3 waves. So here we are with the, I'm applying this now to the USD yen. We can apply this to commodity, we can apply this to stock, we can apply this to futures, for any financial instrument. So that's why I'm saying we can apply this to ETF. So that's what I'm saying to you, pay attention carefully. So we see an impulsive wave. Watch out, ladies and gentlemen. What is movement from here to here is a pullback, yes or no? From here to here is a pullback. But this pullback, if you look at it here, it doesn't look like 5 wave, but it is 5 wave. How do I know? I zoom into this pullback. How do we zoom into it? Traders that are following us know it. You will go to a lower time frame. That's how we zoom into the price. How do we zoom out? We go to a higher time frame. Ladies and gentlemen, let's go to the 4-hour chart and zoom into this pullback here to see whether it's a 5 wave. If it is a 5 wave, the first thing that is coming to the mind of professional traders is a zigzag correction. They do not force it. They do not assume anything. They do not play trade anyhow. It will click that this is likely to be a zigzag pattern. They are aware of it, and when it's taking place, they will take advantage of it. But there is another group of traders that is a bit aggressive traders that are using the wave theory like a science. I do not recommend that trading style. They will just assume that definitely it will be a zigzag. How do you know? All right? It may be a zigzag. It's likely to be a zigzag. Now you are watching it. If it's taking place, what do? You will take advantage of it. Simple. All right? Okay? So now let's zoom into this pullback here to see whether it's a 5 wave. Talking about how do the pro trade the zigzag pattern. All right? I'm going now to zoom into that pullback to see the internal wave or the sub wave. Ladies and gentlemen, when I'm saying sub wave or internal wave, it's the same thing. All right? So here we are. You can see my drawing on my chart. This is my pullback on my 4-hour chart. You can see that it has been divided into 5 waves. You want to see more? Let me bring it. All right. Can you see it? All right. You see this is my pullback, and that pullback has been divided into 5 waves. 1, 2, 3, 4, 5. So the first condition Do not forget, yes, you must see an impulsive wave. Do we have an impulsive wave? Yes, we have an impulsive wave. Now, very often we know that the zigzag is a corrective wave, so it's correcting something. It's correcting an impulsive wave. So if, for instance, out of the blue, you see something that looks like a zigzag, and you don't see an impulsive wave, you may wonder what kind of a zigzag this is likely to be a fake zigzag or something else. Moving on swiftly, ladies and gentlemen, how do the pro trade the zigzag pattern? Now we see that a correction, which is a pullback in this case because it was an uptrend. If it was in a downtrend, we'll see it will be a rally. So in this case, a pullback because the impulsive wave is an up move. If it was a down move, this move will be going up instead, which is a rally in a downtrend. When we see a correction after an impulsive wave, and that correction has internal wave 5, the first thing that is coming to our mind is what? A zigzag pattern. Sometimes, ladies and gentlemen, don't think that this is the whole piece of everything else. Remember, there are other corrective patterns. The flat correction, which you can also check at www.24areaway.com. Here it is, flat correction. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. There's another one with 5. So you want to know what you are looking at. But let's move on, ladies and gentlemen. Our goal is to simplify the wave theory, giving to ordinary traders access to what the professionals are using. So now, because I trade forex, and I was barking about this, so to speak, for a long time, that the crazy currency pair, or the US yen, is not in the third wave, it's a first wave. Now, a lot of traders disagree with me, which is normal, but the most important, they may disagree with me, but they can still make a right decision if they follow the trend. Higher lows, higher high, or lower lows, lower high. It doesn't matter. You can be wrong counting away, but you can make a right decision. That's true. But I like to make fun of some of my colleagues because of the way this thing has been going on, okay? All right, so it's not to show disrespect to them, but to laugh a bit, okay? So now, when I see a correction, the internal wave of a corrective wave from the 5 wave, I'm thinking of what? A zigzag pattern. To avoid that the video is too long, ladies and gentlemen, there is a high chance, all right, there is a high chance, all right, that bring the chart back to normal, that we may see a zigzag correction in the second wave, okay, in the second wave of this crazy currency pair, the USD yen. All right, I'm playing with the chart in here. So, as I told traders before, in my wave counts, this is the first wave from the green spot line to this point here. All right, now we are expecting the second wave. My grid years target, as I said to traders, is at a level, so we were talking about 94. The 94 was reached recently before the price started going up again. My grid years target is somewhere here in the zone of 8400. Very, very greedy target. Remember that, very, very greedy target. Another conservative level trader must watch, which I'm going to draw roughly on this chart, is the 50% retracement level, which is at 90. So at least we will look at 90, okay? But the 84 is a very, very greedy target, a very ambitious target. But right now, all I can say to traders is to watch the level of 90, around 90, between 90 and 9100. In fact, what I will do on what I'm talking to you now is to draw a line there. Okay, around 90, okay, between 91 and 90. Let's call it in orange, okay, that's it, that's okay. So now you see it how the pro are trading, okay, the zigzag pattern. So the first thing that the pro are looking for is when we look for an impulsive wave, which is from here to here. Now there is a pullback, and the internal wave of the pullback is divided into 5 waves. It's clicking into our mind that we are likely to see a zigzag, a corrective wave. We see now that the second portion, this portion here, we can call it the B corrective wave. All right. So we will expect the C corrective wave to continue more to the downside. Now, before you go and buy your option trade or place a trade or do your binary betting or your spread betting, I want traders to remember something very, very important. When the price is going down, the price must display lower lows, lower highs until the price fails to display a new lower low. Economy news can change the dynamics of the technical trading, which means if, for instance, tomorrow the Japanese government came out with more quantitative easing, which means devaluing the yen, the USD yen will continue to move to the upside. This is what we are talking about. The trading triangle can change the dynamics of the market. Now, what we have done today is a technical analysis using the zigzag pattern. Very often, some traders that are using purely the technical analysis will forget completely. They don't want to know about the economy news. They say, George, I don't want to know about the Forex factory, but I am encouraging Forex traders to go to www.forexfactory.com and to pay attention to the economy news, because the economy news can change the dynamics of the market. Next thing, for traders that are trading stock or commodity, check Google Finance, check Yahoo Finance, check Bloomberg, check Financial Times. As we are doing this now, do not assume anything. If the price, you see the green line that we put here last time, prior to bearish signal below the green line, which is in a zone of 9900, call it 9900. How do we sell in a bearish zone? We want to sell if the price is in a declining channel or the price break below a key level, retest it and turn around. We do not assume anything, but we trade like professional traders. Until the next time, enjoy yourself and be very happy. This is about how do the pro trade the zigzag pattern. Thank you for watching, and we will speak to you very soon. We are the TSTW SYS 008 traders.